All right. Good morning, everybody. Welcome to the official Trade Talk channel where I show you how I trade so that way you guys can trade better yourselves. We're going to take a look at some things. CPI came in lower than expected, which is phenomenal for the risk markets. Bitcoin did not do anything. So this is your pop right here on Bitcoin. And you've seen the pop that you got on the S&Ps. You're trading up 57 points on the day, 57 points when you had an expectation of trading around 31 points. So we blown out what the options market had expected for us to be trading. I do have a short position here. Was just trying to catch a small pullback, a little bit bigger than that, but it doesn't look like that's going to work. And I'm definitely not going to be trying to short the market all day. Basically, I took a shot and it didn't work. So probably going to go ahead and close this position out or drop my stop loss. I usually take a 2-point loss. So I'll just move it right there down just a little bit and don't take, the full 2-point loss. But we'll see what happens later on today as the market opens. It's 5 minutes until the market opens. So I was assuming that maybe the market would probably pull back a little bit. If we look at this like under the scope of a daily time frame, you can see all these lines here are CPI highs. All right, I take the high of day for whatever day the CPI came in, and that's what these lines are. And the market had been trading basically around that. So when we got down here near the lower edge of where the May CPI came in, we were looking for a pullback, just basically a small pullback. Was not expecting, 3 massive days like that. That's essentially a short squeeze. And basically you've had 2 days of pullback in this entire move. It's just absolutely astonishing. We're moving up near where we had the July CPI, and that doesn't really it doesn't shock me. If we go look at the eco data right there, you can see that we were expecting 0.3. We came in lower at 0.2 on the core month over month, and then core year over year. We were looking for 4.1. We came in at 4.0. Now, let me remind you, this drop was pretty big. It was at 4.7, I believe. And then it dropped. They were expecting 4.3. And then it dropped all the way to 4.1. So this is the number right here. That's really good. Then you got this right here dropping from zero point 0.1 to zeros. And then the headline number, which is what everybody looks at, including oil and food, is down 3.2. And that would have to be because of the pullback that we've seen in oil. Here is your oil prices. So basically, oil peaked here in or late September, almost the end of the month. And then since then, it's pulled back. So I was watching this area right here, did buy a call, did take profits on that trade. As you can see, though, I was looking for it to basically stop at resistance, and it hasn't yet. Now, obviously, today's not closed. Today could definitely close under that line, but we'll see. The yellow line is yearly opening range. I did take a long position on that. Here are my current options positions that I am holding. Right now, I have a short on the MES, which is the micro ES contracts. I have a short one, just one contract, but two puts. I have a short put and a long put that's just a vertical spread, looking for prices on Arcade to drop. Got long yesterday. Kraft Heinz got two contracts there, just a dollar wide spread. So I added two contracts to make the potential profit higher. This trade was a really good trade because it was like a 3-to-1 almost risk to reward. And then I got Tesla on. That is a long position and a long position on the XLE. So it will be interesting to see where we are when the market opens here in 2 minutes. We can pull up Tesla real quick and see where it's trading intraday. Oh, look at that. Yeah, that's going to be real nice. So I got long on Tesla on this day right here. We traded down. We filled this gap. And essentially all I did was the rest of tech had been rallying. I mean, let's go over to the tech market real quick, or the Magnificent Seven as they've been called lately. I mean, massive rallies across the board. Amazon, mad rally. Google, not as big as a rally, but Google is catching up. Meta, you've literally taken out the previous yearly high, which was right there. It's insane. You're trading above it this morning. Microsoft trading at fresh all-time highs this morning. Nvidia, same thing. So when I got long Tesla, I was like, well, Tesla seems to be, lagging the rest of tech, and Tesla generally trades with tech. So as this thing pulled back here and filled the gap, I took a long position expecting this gap to fill. So we will see how the market reacts here on the open. And we'll go back over to the portfolio and look at how these things are. So obviously the RK position is down. That's, obviously that was going to be down. So, but the rest of the positions are up on the portfolio. You can't just have all one-sided trades, like all bearish trades or all bullish trades. So pullback probably coming. Let's go back over here and see what happens. Not before the stop out, at least. We'll see if it pulls back. I would like the market to pull back so that way it could get in it, but it's had such a massive move already. I would think that more than likely you're going to see a pullback. Very good numbers, but still, can the market sustain that rally is the huge question, right? I mean, that was a big rally, and you only had 2 days that even could be considered a pullback. We'll go back over and check it out. And so these are your 2 days of pullback. Everything else was green. And these are big green candles. Like, big ones, right? This was a massive day. Here, big green candle there. Yesterday we did nothing, which was to be expected, as you know, the market was waiting for the CPI numbers. We get the CPI numbers. Now the market does exactly what one would assumed and blasted off. The real trade would have been to get long before CPI, but if I go back into the Tasty Trade platform, you can see that it did throw a wick down and make that low. And I do believe, yeah, that's a fresh low of day. So one should have got long at the low of day wick based on those good numbers. I just missed the trade is all. So that would have been a fantastic trade. Nobody really was expecting, or I wasn't expecting the numbers to come in, that good. I was expecting them to come in line with expectations. So that's really big numbers. So market's not pulling back. You just hit 4492 on the futures. The prices on the CFD, which I'm showing you here, and the futures are different. I can't show you the futures because the data is delayed. But I'm looking at the futures over here where I do not have delayed data, and you can see just hit a fresh daily high of 44.92 spot 75. All right, so with that being said, Bitcoin not really getting the pump that I was expecting it to do. So it makes one wonder, since Bitcoin hasn't really been trading with risk because it had its move to the upside way before risk did, and then kind of drifted to the upside here and then broke out. I don't generally like to see candles pull back like this when you break out of a sustained pattern. This pattern right here was being shorted based on bearish divergence that was going on the RSI, and I wanted to see more of a squeeze than that. So we'll see what happens. If you're bullish, as always, you look to buy daily supports. Daily support right now, the near-term daily support would be right there, and that would be 36,475. Price is trading just above it. DXY breaking down out of a bull flag formation. We broke down on the day that we had the Fed announcement, and then it pulled back, and then now it's coming back down. So we could probably assume that the DXY is going to come down here, retest yearly open, and we'll go from there. I mean, there probably isn't no reason for them to hike rates any longer, and that's why you're seeing the dollar price this way. So if I were you from now on, I would be looking to buy dips on things versus the dollar. As you can see, the pound getting a nice move there. Aussie dollar had raised their interest rate, and then it was priced in. Then it dropped all the way down to daily support, and now you're getting that rally back. So basically, you don't want to take the trades on the news day. This day right here was when they hiked rates. Next day, it dropped, right? Which, would have been the next session because the RBA announces its rate decision late at night. So you wouldn't have been able to trade. Well, you could, I guess. I think they did it on a Monday or a Tuesday. No, it's Tuesday of last week. So yeah, now you're getting that big rally on the Aussie. So I would expect that to continue. As far as the yen goes, let's go take a look at the yen, see where it is. Japanese yen getting a bounce. Did it take out that low, though, is the question. Yes, it did. Today, it took out the low. So finally, since that low was put in October 2022, we have taken it out. That does not mean I would get bullish. That means I would wait for this rally to continue till it finds resistance. Resistance, is going to be up here or up there somewhere, and then I would look to basically fade that. And I would not do it with the dollar because the dollar is going to be weak moving forward, at least for the next, until we get the next rate decision. I would assume the dollar to be weak. So as far as the option positions, I will close that ARK K trade out today because I do expect her portfolio will act good now based on the fact that the numbers that we got out. She's got a lot of Roku and stuff like that, though. Let's go see what Roku's doing inside of ARK. It got a gap up as well. So yeah, we'll close that position on a pullback. But the rest of the positions we're going to hold open as they are longs, and those trades will need some time to play out. How is everybody doing on this fantastic day? Let me get over here to where I can actually see. Good morning, good morning, good morning. All right, that's it. Okay. Yeah, it is a good morning so far. Doing all right. As far as all the trades that I'm holding, like the pound dollar shorts, I'm probably going to close that out. Probably going to close out the Aussie dollar short. Probably going to close out the USD Swiss franc long. As you can see, this thing has not recovered since tagging the yearly opening range. Probably should have taken it off there, but that's hindsight for you. We're in down here, so it doesn't matter. We're still up pretty good on that trade, but I do expect the dollar to come off more than just today. So we'll be looking for that. Now, we do have more news coming out tomorrow that's going to be potentially, strong news. We got retail sales. So this needs to come in better than expected also in order. And then we also got the PPI. You got, a lot of that stuff. And then oil. So we'll see what happens with that on the oil front. We do trade oil using via options or contracts on futures. You can trade options on futures as well. Probably going to look to short this pump once it finds resistance. All right, so yearly opening range would be a good spot if it gets up there to potentially look for short entries, but I got to allow that resistance to form. Notice how when we came in here to it, it held as support for multiple days. That's what I mean. I want to see support build. This is what I'm talking about, right? But ultimately it broke. So this would have been a place to get long if you would have been bullish oil. We'll see how that plays out, though. We'll see how it plays out. The rally has finished more than likely for now. And we'll see, right? We'll see how it plays out. Let's pull up moving averages so we can get a good idea of what's going on here. You can see the 21 is way up here. The 21 is the one that we focus on the near term 4-day trades. And this price is just snapping back to the 21. Also, it could pull back to the 50. And that's where we would be looking to re-enter short positions as all of your moving averages have turned down. It is possible for if oil gets back above them, then you would be looking for long entries. But oil is very difficult to trade as it can chop around, right? It can definitely chop. This thing can chop retail traders apart. So just be careful there on that. Let me check something. All right, no drop frames. Everything looks good. All right. Euro USD is up almost 1.2%. I mean, that's insane. Insane. Would not try to short any of this as I would just let it play out. Not today anyways, as we got the bell and the market did not react bearish. Futures are still pushing higher. Dollar is just made a fresh low at 104.52. Over here it says spot 56. But this is not delayed data. So I wonder why the prices are different. Let's see, what's that low say? Yeah, they're not different. They're good. All right. So moving on, let's go look at some of the things that I was watching for trades. We took the Boeing trade, or I took the Boeing trade, closed that out. Probably should have held on to it for a little bit longer, as now we're breaking out. I took the trade down here, so when we traded up to resistance there, that's when I exited the position. Obviously, if I would have known that we were going to gap up yesterday really big on some good news, then I would have held that long. But that trade is working out. Basically, a lot of these aren't. I was looking for shorts on this, but I told you that we would have invalidated shorts at 312 spot 48. So no longer looking for that. That's a big bounce up on Goldman Sachs, big bounce up on Schwab, but for some reason Schwab is really not holding its own like the rest. XLY, consumer discretionary. There's a lot of Tesla and Amazon in this. A big move to the upside. This one we were looking for longs. We would have stopped looking for longs at 444 spot 35. You can see how it came into the level that we were expecting it to get to. And boom, up it went. Unable to take that trade. I did not get filled in it. And the same goes for Lululemon. I don't know why that's not up there anymore, but we were watching Lulu right here to get long. On this day right here, I threw out a limit order to get filled, and I never got filled. So I was unable to get filled in that long position. So a lot of these trades worked out. The bank shorts did not. All right. Those are basically the ones that did not work out. PayPal is trading into resistance right now. I would look for a pullback if you were trying to get long on this product, but it doesn't look good. I mean, this one looks more to like a short to me. And yesterday I was talking about getting long IYR, which is real estate. I did not get filled. Another disappointing no fill. Just to wake up today and see this thing trading at targets. I was just looking for this to rally up to around $80. We're trading at 80.72 right now. XLP, same thing, was looking for longs. Just I couldn't take a trade yesterday because we were currently trying to break out above resistance. I needed a retest of support. Haven't gotten that retest of support yet. So we'll wait for the XLP to find support, and then we'll look for longs then. Google, you can't do anything with this till it pulls back. Tesla can't do anything with it till it pulls back. Microsoft, yeah, I mean, if you want to call that a pullback, excuse me, if you want to call that a pullback, go ahead. It's not what I recommend as a pullback, but Jesus, this thing is just absolutely ripping its own face off. It cannot. Here, let's change this flexible grid and go over here and pull this up. All right. So this right here, this chart just shows you the expected move. We pull up Microsoft and then make this chart bigger. I mean, just look at that. Literally just massive breach of the expected move on Wednesday, Thursday, and Friday. And then we got the next Monday. By Tuesday, you breached that week's expected move. And that's how you closed on Friday. So, like, you're looking at a 4 standard deviation move there. Generally, this would be a perfect one to short. But you can't short it when it's breaking out. And it would be a good one to short just for a pullback because it hasn't had it yet. But obviously, trying to short this has not been working. As you can see, I mean, it has not, on the 2 days that it did pull back, they were very small range days. You can see that right there is like a $4 range day. And then yesterday it pulled back off the close, but the range that it put in on the open was just so small, right? So ultimately we are expecting Microsoft to pull back at some point. Just don't know when that's going to be or where. So yeah, a lot of things happening. And this inflation number is probably going to make the Fed pause. Let's see here. I don't have it pulled up. Oh, that's right. I reloaded Windows, so I don't have it on my browser anymore. So let's Fed Watch tool. I'm just kind of interested to see what they're looking at. 94% chance that they're not going to do anything in December. So that one rate hike that was on the table for this year, not happening. They don't have anything happening in January, March, May. They actually have getting cuts. So this is interesting. So right now, the market's pricing in a cut in May instead of June. It was June. So that's moved up 1 month, a whole month probably based on the information we just got. So yeah, I mean, soft landing, I would probably agree with it. Higher for longer seems like it has worked. I just can't believe I missed that trade. I can't believe I missed a lot of these trades. TLT, obviously, look to get long on pullbacks. Bond market is good. People are buying bonds. This is consolidation down here, breakout. Then we got more consolidation, breakout. So I am going to be looking to position myself with a long call, and I'm just going to hold that call. So I'm going to buy super long dated, probably like years out. Not years, I mean, but at least a year. Maybe all the way into June. I don't know. But I do want to get long a call. I can't do it right now while it's breaking out, though. Right? Can't do it right now. That would be just chasing. We already took profits. We did get long on this day right here. I posted it on Twitter. I was looking for a pullback, got it, got long, boom, took profits, and then we pulled back the next day. So, yeah, I actually thought it was going to roll over, and it probably would have if those numbers would have came in higher than expected. It probably would have rolled over. So, the data is working pretty decently with technical analysis right now. I mean, when something breaks out and goes well far and above where you expected it to go, then I would say you're probably on the wrong side of the market. So the DXY was just basically trading in a range. Even if you are, looking to short the ES or something like that as to just for the pullback, please understand that it can continue to go up much higher before you do actually get that pullback. The NQs is just, it's insane, the rally in there. Small caps are up 3%. Look at that, 3.56% on the small caps. Gosh. Big move to the upside. Still under the yearly opening range. This date is delayed, so let's go to the IWM. testing yearly opening range right now on the IWM. Let me just make sure that that's in the right spot. Yeah. Testing your yearly open right now on the IWM. That is a massive gap up on small caps, which is good because we can't have a market sustain a bullish rally. Oh, look at this. This is your S&P 100. Holy shit. 95 advancing while you have only 6 declining. That is uber bullish. I mean, I don't think I've ever seen 95 and 6 before. Now that's on the 100. Let's check the 500. That's funny. 474 out of the 500 stocks in the S&P 500 are rallying today. That is green everywhere. Green, green, green. Look at that. Boom. Yeah, I wouldn't. These red ones are just going to be capital rotation, more than likely. If they were long, ExxonMobil though is based on oil. So let's go to ExxonMobil real quick. Almost everything's green today. That's insane. Yeah, ExxonMobil pulling back. That's based on oil. Oil having a decent day today so far. It's up 0.83%. So ExxonMobil might be a day trade if you wanted to get long based on a red to green move. That just means where you open, you have a pullback, and then you get back to your opening range and rally. A lot of wicks in here. It's not a big mover, obviously. All the way up here would just be a $1 move. So, not a big mover, but I mean, I would assume it's going to rally for the majority of the day as long as oil stays up. Now, if oil turns down, you don't get any oil news today. It comes out tomorrow. If oil turns down, then I would expect ExxonMobil to not rally. But as long as oil does what it's doing there, I don't see any reason why ExxonMobil not rally with oil. Didn't see you had gone live. Hope everyone is well. Good to go. Bitcoin may have just offered up a nice entry at the daily open this hour. Yeah, it's not doing anything still. Bitcoin isn't even moved 0.5% today. After a decent pullback yesterday. One could try that. Yeah, it's almost a 3% pullback yesterday. But it's rallied very hard too without, I mean, these are pullbacks, sure, but they're not deep corrections. They're just slight pullbacks, little itty, like just tiny pullbacks. I love to see that because I'm long Bitcoin, but it's still, you would think that one would see a deeper correction. But you don't have to. I mean, usually when Bitcoin gets bullish, it stays bullish. But no big downside candle yet, which is odd. Because I assume it will get bought up. As long as soft landing is on the table, inflation rate trending lower, I don't see any reason why Bitcoin would fall. Now, here's one thing that you could potentially see is a lot of people who were in Bitcoin because they were afraid of bonds may now leave and go into bonds, but I don't think that's going to happen. I mean, I don't think it's going to affect Bitcoin. Nobody really understands why this rally happened. One did say, the BlackRock guy did say that he thought it was probably based on, people looking for safety. But Bitcoin isn't known as a safe haven asset. right? Bitcoin is traded as a risk-on asset. So whenever stocks are doing good, Bitcoin generally does good. But Bitcoin has not been trading as a risk-on asset. As if you overlay the S&P 500 to this, you can see that it started to rally well before the S&P 500 did. So S&P's pulling back through all this time with Bitcoin, but Bitcoin starts its rally here as the S&P puts in that low. So Bitcoin had already taken out yearly highs. That was your yearly high right there, that green candle. So S&P 500 was rolling over as Bitcoin was making fresh yearly highs. Now the S&P 500 has caught up to Bitcoin, but I mean, Bitcoin started a rally before, so maybe that was why Bitcoin started the rally. Put in a giant bear trap right there on the SPOOs, and then just take off. Beautiful stuff. If you do want to get long at the daily open, you could potentially do that. Will the trade work? Obviously, I don't know. But that is 36,475.67. Probably would have been done there or there. If it comes back to it now, I don't think I would like the long, as it's 10 o'clock in the morning. Hoping it will catch a small bid with this bullish momentum, looking for a 2-to-1. Well, just make sure you keep your stops in there good. I don't see a position to take on Bitcoin long nor short here. You're in the middle of the range. The clear range is from this area here to this area. You're kind of in the middle of it. So we'll see if it's able to break out of this range and then, trade within the larger range. We got range resistance up here. So yeah, I mean, it's trading within the smaller end of the range there. It doesn't make me want to get long. That's actually supply right there, so we'll see if that area holds as resistance as it did 15 minutes ago. So if people are trying to short right there, I guess I could look to take that side of the trade, but I don't really want to take a short on Bitcoin when everything is as bullish as it is. I mean, basically, if you look at my watch list, the only thing that's red is dollar stuff and then ETH. But ETH ETH's been doing its own thing recently as well. Yeah, ETH had a pretty big day yesterday, but it all pulled back. So ETH and Bitcoin not trading 1-to-1. Bitcoin's definitely stronger than ETH. But you are seeing it pull back a little bit. So that's, one could argue that Ethereum has been stronger than Bitcoin for the last couple days, but for the majority of the year, I mean, Bitcoin has been much stronger than Ethereum. Much stronger. This is a swing low down here, so obviously it's normal to see a bounce. You can trade this. This is a tradable asset, ETH-BTC. So people will get long at areas of support. Let's see if it's a longer end support. It's also monthly support. They're not the same prices, but they're close, right? Monthly and quarterly support. And even yearly, one could argue. That's old yearly resistance there. and it's almost right on that same level. So you could see why people would be getting long ETH versus Bitcoin here, just on a technical basis, right? Just on a technical basis. Still got a lot of work to do though on the monthly, as you're just testing the midpoint of last month's range, which is an area where people would like to take shorts. Which is where I would probably be on this front, because Bitcoin has been so strong lately. Big strong day there. Stacking sats, baby. Stack them sats. I don't trade this anymore. I just stick with Bitcoin futures. I was trading ZRX the other day. I made a little bit of money on it. But you got to be very careful trading it, because it is moving fast. And then you can, with leverage, you're taking such a massive position. When this thing moves, 1 cent, it moves your whole portfolio. So just be very careful if you are trading this. This right here is probably the best trading crypto right now, because of the speed at which it moves. I mean, it's insane. It's a big mover. It was up 50% on Saturday, so, and you can see that you're making higher daily closes. So shorting it isn't really, I mean, if you short it, make sure you're shorting it at resistance, and make sure you're using very tight stops, because they will liquidate you in a second on this thing. It's because of how fast it's moving. It doesn't look like it's moving fast. But today's got a 13% range to the downside and a 15.8% range to the upside. So even though this looks like a small candle, it's not. It's a huge range. So these moves are much bigger than you think, is what I'm trying to say. Where was it when I got short? I mean, it was just a small trade. I think it was here. I took a short, took profits, and then got stopped out. But still, it was a good trade. It was levered up, and it just moved really fast. I was like, wow, this thing is really cruising. Use tight stops if you're going to trade it, but this is a good one to trade right now, because you can make a lot of money on these, especially if you get a big down move like that. Boom, boom, boom. Paid. We can go see where. So right at the quarter to 2022 low is where I got short. Let's see here. So all the way down there. This thing is rocking and rolling. Oh, it was on this day right here. Let's go find that. Yep. It would have been right there. Right here. Yeah, it's moving. Be very, very careful. Be very, very careful. But I think you're probably pretty much done on this. Most cryptos do get wrecked from the lows down there. You're trading up 240%. Huge move. But this thing just gets wrecked. Every swing high has been sold into. But it could be different. The bear market could be over for crypto right now. The lows could be in. So Don't look to short it. Wait for pullbacks to support. That obviously hasn't built in a support yet. So you just got to wait for it to do that, as every day is closed higher than the previous so far. But it does look like it's running out of steam. However, you got to give credence to the bullish side of this asset for right now. Are there any things that you guys want to see? Let me know. I'll pull it up. I will pull it up. NASDAQ, just crazy. Still hasn't hit all-time highs yet, but it's not far from making a fresh yearly high. There's your yearly high for 2023, my bad. Coming into 2024 pretty soon. We got this month, which is, we're 14 days into it. And it looks like soft landing for sure. Aiden. Yeah, it's still rallying. You still got to wait, Johan. We looked at this on Sunday and it was there. No, it wasn't. It was there. Sorry. It says Friday. No, I think I remember looking at this thing. Oh, it was last week, not Sunday. It's still going, so let it build in support. This big gap down here is what worries me. I don't think I would look for the entire gap to get filled. It may stop around there, around the midpoint, because you got a daily resistance right there. So if it does pull back down to there, I would want to see it build in support. And then that's where I would be looking to buy it. Like on a bear trap. Let me pull up the moving averages, though. I guarantee it's going to be bearish. Yeah, it's just not, just because of this gap, it's just now starting to build in to where you can start taking bullish positions on it. You're massively overbought. You went from massively oversold to massively overbought. Huge bearish or bullish divergence was being built right here. Huge divergence. So this was definitely an accumulation zone, and since it got such a big rally, I would definitely be looking for a pullback to get long. I mean, there's a lot of traders out there that'll buy breakouts. I'm not one of them. If you want to try to go that route, you can, but buying breakouts just never worked for me. Not long term, right? Obviously, some days would be winners, but most of them were losing days. Breakouts are just not the way to trade. Not for me. I like to find support, let it build in, and then get long, and then watch it go. AAP. Yeah, that one was one that I made a bad call on. I said that, down in this area, you could be a buyer on it. And unfortunately, it dropped from $70 all the way down to $47.77. It looks like it's getting a rally now. So we'll see if it's able to sustain this upward momentum it's got right now. It did build in support for 2 days, and then you put in a bear trap, gapping down, but ultimately closing bullish. You got earnings coming up on Wednesday. That is tomorrow. Be careful. This will be in the morning earnings. So if you're going to take a trade before earnings, you got to do it today because they'll report before the market opens tomorrow. I don't think I would. I don't like to trade around earnings. There are trades that you can make, obviously, but I just don't like trading around earnings. But it looks okay. I mean, Advanced Auto Parts is a good store, and every other store that does the same thing as this thing does is doing good. All the sectors are green, but that's not what I wanted. Here's here's AutoZone. Same thing, right? It's an auto parts store. Just getting ready to make fresh all-time highs. Go to O'Reilly, fresh all-time highs. These are generally good stocks to own. O'Reilly almost tested the yearly opening range there, and boom, up it goes. Green earnings, green, 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 green. They make money, right? Advanced Auto Parts was different. It was a management issue. And I told you my biggest thesis was the stockholders, or the board of directors, if you will, the people that own the most shares in this company, they're not going to just allow this to happen. They will fix the problem, right? They will fix it. So it's probably a good long-term buy, but I wouldn't do it with leverage. I would just buy and hold it, and I would put a stop down around $48. So you've only missed, a $20 move. Just understand that it could go back down there on earnings. Like tomorrow you could wake up and the stock market open, this thing could be trading down in here. So just be careful. I haven't been keeping up with it. I don't know if they've fixed their management problem, their management issues, but it does look like it's trying to recover at least a little bit. That's pretty good momentum. Like this wasn't, right? This was just sideways churn before it rolled over. That was decent momentum there, and it rolled over, and then earnings gap down. You got earnings coming up again. I didn't know this was a dividend paying stock. I don't see dividend in the future, but I'm sure it would be there. Let me check Thinkorswim. Oh, I already switched it back. Never mind. Yeah, just be careful with it. Ultimately, I think it's going to be trading at $100 again and maybe higher. I just, maybe this is the good news with inflation and all that going lower. Maybe this thing will finally catch a bid. But I do like it. I mean, Walgreens is it's one of those that I would love to be a buyer of it. You know what I'm saying? But I just can't. Not when it's getting crushed. Look at how far it's fallen. Like, what happened to you, Walgreens? And it hasn't been falling just this year. It's been falling for years. Since 2015 was the last time it made fresh all-time highs. They've been making lower highs and lower lows since July 2015 on this stock. That's a long time. That's almost 10 years. We're getting ready to come into 2024. We're a month and 16 days from being 2024. 9 years. It's just been dropping. So yeah. This is a good one to sell calls on. It just doesn't have much premium. That's the problem with it. Yeah, it has zero premium on it. Zero premium. Like you would have to sell right at the money and then still it's not worth it. These are $2.50 wide or $2.50 wide strikes. So that, let's see if we can find dollar wide strikes. Here we go, 50 cent wide strikes. Still, you'd have to be so close. And it just doesn't have it. It just doesn't have the premium to sell. Why do I have two open interests? And the implied volatility skews against you as well. I mean, this would be good as far as for selling options. It just doesn't have good premiums on it. Where is skew? 135, so it's dropping. I like to look at this on the weekly. It's better. Yep. Yep. So I don't know. Auto Parts can't get its stuff together for some reason. Could I look at Uni USD? Yeah, absolutely. It's not doing nothing. It's not pumping like everything else, but it is above the yearly opening range. It is pulling back into support. So if Uni is going to follow the rest of the crypto market, if the rest of the crypto market continues to move up, then this one would be something that I keep my eyes on. So it's right at the area where I would be looking to be a buyer. $5.10 is daily support. Yellow line is your yearly opening range. So here's the question. Is Uni going to close bullish on the year or is it going to close bearish on the year? But it's right at a good spot to be a buyer. Even though it's had a rally, you've had, a couple days of pullback here. It's just it's not moving like the rest of the crypto market is. Got a nice pump on this day, but just barely moving. S&P 500's got a high of day of 4508 spot 50. Jesus. So I guess it's not even going to pull back and give anybody an opportunity to even buy it today. That is not a pullback. Neither is that. Like, come on. But since the news came out, and then here's your opening range right here. It's when the bell came out. You're up. If we could get a pullback down to there, I could be a buyer. That's such a big move, though, already. So, I mean, that would literally be chasing price. Even if it pulled back to the opening range, you would be chasing price. Opening range 446.96. A wick down to there. Up she goes. Maybe we'll see if we can get it. I'll trade it. Tesla up 3%, but falling. But I'm still going to hold the trade, obviously. It's still got plenty of room to go to the upside. 242.18. Magnificent 7. I mean, it's up 3. Even though it's a down day, it's up from yesterday's close 3%. Let's just maybe be looking to fill the gap. Maybe it turns around at the 230.47. If it doesn't turn around there, then I wouldn't try to get long. It does look like it may be trying to turn around there. Yeah, in order to buy a call, I would need to buy the 230s. See, can I? No, I cannot. I have only one day trade left, and I saved that for emergencies. Like the other day, I took a trade, but I did it the opposite way. On this trade here, I did it the wrong way. I accidentally sold the 83 and bought the 85. That's not the right way. Because you're selling something that's in the money. You could get exercised instantly. And I don't want to get exercised. So yeah, so that's why I don't. Once I get to 2, I'm only allowed 3. I've already been warned. I got to 4 once up here, and they locked me out of the account. So I had to go in and beg them to let it back open, and they did. They said, this is your one and only warning. You cannot day trade if you don't have $50,000 or $25,000 in the account. So we'll see what's going on. I leave that for a mistake, a boo-boo. So even though it says that we're in profit over here on the day, 16, 32, and 11, over here it says we're up 850 on the day. That makes no sense. None at all. But these positions are going to be left on for a while. What's ARK doing? It's probably good to get out of it because it's going to do whatever Tesla and Roku does. Right? Because that's their two biggest holdings. So, but that's a very small trade. I only bought that with 1 contract. I bought the Kraft Heinz with 2. ARK only 1. Back over to Bitcoin. There it was. I mean, look at that. You just can't. Ugh. I mean, it had already tested it, but we were trading like here. I needed. Damn it. That's not a whole percent move, though. Yeah, it is. It's a 1.28% move. That is so weird. But that would have been a good short. Just missed it. So here's daily support. Right now you're testing it. But that's some momentum there. 1 hourly candle just took out 3 of them. Supply down. Why didn't we take that trade, chat? My few ledges would have been chasing. Mm-mm-mm. But that would also be profit target. So don't get short right now. That's daily support. Just now tuning in. Did you cover Tesla yet? Yeah. Yeah, I'm long Tesla. I got long Tesla right here on this day. I got long there. Filled the gap, this gap right here, from this candle to that candle. Once that gap was filled, I got long. I based the long decision on the fact that the rest of tech was ripping and Tesla was not. Tesla was actually rolling over. So I'm going to hold on to this trade because this trade has big profit potential if it continues to go up. We were just saying that if you wanted to buy it today, 230.61 is the area to watch because I don't think it's going to come down and fill the gap completely because it's in the process of filling this gap right now. So if Tesla's going to close bullish on the day, then 230.61 is where I'd be a buyer. Now, if you get a candle that looks like this, then I would not be a buyer. All right. If you get something like that, if it looks just like this one, but it's down like that, don't buy it. But as long as it holds here, you could potentially buy a call or buy a call spread even. You could buy a $5 wide spread. But the problem with buying call spreads right now is I mean, I did it. You know what I mean? That's what I did. I bought a call spread and it was against me because of the implied volatility skew. Well, now it would be good. Yeah, now you could build a $5 wide spread. You would buy that one and sell that one, and it's still skewed against you. Max loss would be 257, max gain would be 245. And it takes a while. You don't get the max gain just when it gets in the money because you can see I am in the money by multiple strikes here. And the profit on the trade, I should have just bought one call instead of freaking, is up almost 50%. It hasn't quite hit 50% yet. Once it hits 50%, I'll close it. If it hits 50%. I won't let it become a loser. If it gets under 50, I'll close it and just reopen a new one. The problem with buying Tesla calls is A, it's expensive, and B, they move so fast. Like this call right here is worth $1,000 by itself. See? $1,380. But I am in trouble on the other one, which is okay because I'm covered. So like I could still get assigned, right? Whoever I sold this to could close their position and that would cause assignment. But I'm covered because this put or this call covers it. It more than covers it because it's $5 further in the money. So even if they assigned it, it would just close the position. And the position would be closed for a gain. I think it's going to go higher long term. I mean, honestly, I do. I don't see why I wouldn't. Rest of tech is like I said, Microsoft is making fresh all-time highs. This is an all-time high. Pre-market, it made an all-time high at 370, 304, but that won't be counted because it was pre-market. Let's see. Yeah, this is going to be your all-time high right there. At 371.96. So we can go into the daily and see what's the all-time high. 371.95. So it's a penny off. But you're making fresh all-time highs on Microsoft. So Tesla, I would love to see Tesla do that. Amazon did it. Google, not really. Google just filled a gap. But I'm not bearish. I would not be looking to short this. Say gap filled. Okay, let's get short. No, I wouldn't. If I did, it would just be a pullback to 132.79, then I would be getting bullish again. 45.13 just printed on the SPOOs. On the futures, 45.13. And you're at 15.892.25, which is a fresh daily high on the NASDAQ. Insane. You've made fresh yearly highs on the NASDAQ. Oh, wait, no, you haven't. Yeah, no, you haven't. Sorry. Your yearly high is at 16,251. But 2 days like this, and you'll be there. Moving on up. Even bonds are doing good. Bonds doing good. We got the 30-year pulling back 3% on the day. Damn. US 10-year. This is almost 4% on the day. The 5-year, 4.35% on the day. 2-year, 3.53% on the day. So 2 years looking good today. I'd love to get along this. I don't know if it has options. It does. They are not very liquid, though. It does not have any open interest. How much buying power would it take to buy a call? 890. So that's a pretty big position. That would be like a tech play. Or you could just trade it like this but it requires more buying power than $800, I think. Let me go make sure. Yeah, it requires $1,267 to trade it. Just trade it like this, buy the futures. But you got to be careful with the futures because of issuance and stuff like that. Like you got to be out of the position before the contract month changes. You'd have to take delivery. So options would be better, obviously. Just buying a call or two. Or that's for the 2 year. If you want to trade the 10 year or the 20 year, then you trade the TLT. Let me see here. Is the coolest name in the NBA. Bam Adebayo. I don't know how to pronounce his name. Adebayo. Hello, Fabio. Could you give us a look at TLT? Thoughts on that? Yeah, I'm definitely looking to buy it if we get a pullback. Not today, but if I can get a pullback to 87-ish, 87.94 or 87.97, 87.99. If I can get a pullback to there, I would buy a call on it. Yep, I'm looking for, the buy calls. This is going to change a lot. The Fed tool, Market Watch tool, has got the Fed cutting rates in May. So they've bumped it up a whole month. That's going to be bullish for bonds. And bonds is the best thing to buy right now because, yeah, right? So, and when they start cutting rates, bonds are going to shoot to the moon. So it wouldn't be a bad idea. And you don't want to buy like the TLT outright. You could do it just by trading it, right? Buy calls on it instead. You can lever the position up to where you make decent money. Like you can make infinity money on it. You could sell a $82 put and buy a call and you'd be double long. That's as long as you can get without, also owning the stock. So if you bought the TLT, the outright shares, and then you went and sold puts against your shares and then bought calls on top of that, you would be like long 3 ways to Sunday. 3 ways to Sunday. Long, long, long. But obviously any tick lower would hurt. And if I'm just outright wrong and it continues to drop, it would hurt. So I would just buy calls. It's the safest way because that's what you lose, right? It's a defined risk. Defined risk. You always want to define your risk. You want to know how much you're going to lose, how much you can potentially lose. What is the max potential loss? That's what you need to know. And if you want to set it up as a bracket order so you don't lose the max potential loss, then you can do that as well. But calls is the way to go. I was looking out a long time. I don't think that would be the way to do it. I think the way to do it would probably be maybe 66 days out to January because they're cheaper, one, and two is you can just reopen a new position when these, once they expire. Now, you still will lose time value on them, even if you're in the money, because there still is time value associated with the premium. So even buying calls, you will still lose a little bit of money because they will just inherently go down. You can see this simply by going to where the 3-day is now and look. So that's like that same call we were just looking at. That's what it would be worth. So you would lose money even if you were in the money. That's why I said instead of buying, like a year out, it would probably be better just to buy more near term and just keep putting the position on every time you get a pullback. Would probably be the safest and bestest way to trade it. Safest and bestest. So I would probably go out 45 or 66 days and then close it before you get to the 30-day mark. Because the way option premium works is like this. Let me see here. The way it works is this would be like 90, 60, and then 30. Why is it drawing it slanted? 30. So let me see if I can do this. I hate drawing with a mouse. 60 and then 30 days. These are days to expiration. DTE. Days to expiration. This is basically how it works. And then once you get past, I can't do it because I haven't got this situated for one screen yet, but you get an exponential drop once you pass the 30-day mark. That's more like it. Right? So this is your theta decay, 90 days out, 60 days out, and then 30 days out. Boom. You get an exponential drop in your premium prices. So I would buy out 60 days, sell them at 30 days. That way you're not losing all that premium to theta decay. You got to know your Greeks. Know your Greeks. Could you give a look at TLT? Oh, yeah, that's what we're doing. Yeah, I like it. I'm just waiting for it to pull back. Wait for it to pull back. If I can get it back down to 88 or 87.99, I might buy the 88. If we drop below 86.68, that's going to cause concern. I'd be a buyer all the way down to $83, to be honest with you. Anything under that, I'm not a buyer. But I don't know if you'll get that drop. In fact, one could potentially buy one today when we tag that level right there. What would we want to buy? We would want to buy the $89 strike. Unless you can get 89.50s, which you can't, not 66 days out. You can 17 days out. You can buy the 89.50. But again, your premium is going, you're not going to make much with each tick up. Like you would need to be in the money almost 4 strikes to double your money. Because this is what you'll pay for it, and then this is what you can sell it for. But you would need it to move a full $1.50 in your direction. And with like in a couple days. And that's a pretty big gap a pretty big gap up. But the S&P 500 is still rocking to the upside, so is the NASDAQ. Please do not chase them because they have not had a really good, decent pullback since they started the rally. So that means you could get a really big downside candle, like a blow off almost. But I wouldn't say that the rally would be over at that point. That's where people would start buying. But eventually what you're seeing right now is just shorts getting wrecked. Wrecked. They are just absolutely getting wrecked. They're shorting every 5-minute candle and they're just getting wrecked. Wrecked. This is a massive short squeeze. Eventually that squeeze is going to stop. And when it does, you're going to see a pretty big down day, more than likely. That could last for several days. Then we want to be a buyer. You're so far stretched right now. Like, look how far away you are from your 21 exponential. And that thing is pointed straight up. So eventually a short will work on this, but how much money are you willing to lose before you finally do call the top? And it's not going to be the top. It's just going to be the top for a little bit, at least until next month, until we get the next CPI print. So think about last time where we were. Let's go look. Let's pull it up. Let's go back to the day. Let's go look last time that we were here. All right, so 10/8, September. We were at 3.2 in September. Right? So where is September? CPI high is right there. September 13th. I know that's actually August's number. I'm just saying that's when we hit 3.2. So the market, since we're back at 3.2, the market has priced back in like we're at 3.2. So I would say, we could get up as far as August, but then we're going to probably chop and then rally again if we get a lower print. You see what I'm saying? I wrote about this on Twitter. It looked to me like the market is just literally trading between the CPI numbers. CPI was going up through here, right? Getting higher and higher. And then we get a lower number. Put in a bear flag or a bear trap, I'm sorry. And then straight up it goes. And we just had CPI today. This candle is bigger than this one. So I would say we'll probably trade in this range for a while. From like 4,400 to 4,550. Right? 44 to 4,550. That's a 150 point range I could see us trading in for a while. This is a big move, and these gains need to be consolidated. If we consolidate the gains, then we can look for the rally to continue. As long as we get, higher CPI numbers and then ultimately make a fresh yearly high. Now, it doesn't matter what I think, right? You could definitely make a fresh yearly high with a 3.2 headline number, but I don't know why you would. Because when you made this yearly high, that was with a 3.0. In July. Let's go back and see. Yeah, July. See that? July, you got the 3.0. Then it started going up. That's when the market rolled over. You see what I'm saying? So I'd say we make a fresh yearly high once we get back to the 3.0. This is a very, very stretched out market. You haven't even hit overbought yet. That's crazy. Crazy, dude. You should be overbought. Same for this. It's just now hitting. I mean, it technically, I guess you could call it overbought, but it's just an insane rally. Insane to the membrane, except for Tesla. Everything else, even Netflix, has just rallied. Nvidia rallying, almost making fresh all-time highs. This is your all-time high on Nvidia. Microsoft, fresh all-time highs. Meta, fresh yearly highs. Google, not yet. Amazon, fresh yearly highs. Apple, not yet, but soon. So most of your tech has hit fresh yearly highs. Do you think the NASDAQ could be putting in another double top like it did at the end of 2022? No. No. What happened at the end of 2022 was different. All right? It was completely different than what we got going on now. The end of 2022, remember, we were in zero interest rates, almost zero, like 0.1% interest rates. And the Fed was buying bonds, right? They were buying bonds. Then they said that they're going to stop doing that. And look what happened. So no, I don't believe this is going to be a double top and it's going to roll over. I don't think we're in a bear market. I haven't been bearish since the yearly open. Now, when we put in this move, we were trading it to the downside. And as long as inflation would have kept going up, then yeah, I would say probably I would be more bearish than bullish. I was definitely more bearish than bullish over here. But now that we've gotten a CPI print that's much lower thanks to oil, right, pulling back, as long as oil doesn't rip to the moon, then I would be bullish equities. I would not, or indexes. I would not be looking for an OA bear market. I mean, just think about what's going on. The Fed literally has potentially fixed it. They won't say that it's fixed because, you know, there's other data that still isn't looking good. We're still not doing good in manufacturing and other aspects. We're still inverted on the yield curve. There's still people out there that are going to scream, we are going to see a recession, right? But I mean, the market is not saying that. And the market is the arbiter. The market depends. All right, so people that say the market is not the economy, I understand that. I do. But the market does decide who wins and who loses, right? It's the score, if you will. If this is one big game, it's the score. Price is the score. If you are bearish, you are losing right now. Right? Why be bearish? There's nothing bearish about this. This is a bull flag. And you have broken out of it. Not just broken out of it, you crushed it. You retested it. And you're going. This is not bearish. No, not bearish at all. So if CPI continues to get lower and lower, price will continue to go up and up because the Fed will have won. They will have beaten inflation. They will start cutting rates. The market will continue to rise. People are already saying soft landing based on today's numbers. That's good news, man. This is really good news. Inflation dropping down. They have a 2% target. And going from 3 to 2 is going to be difficult. But they're going to stay higher for longer. They've already said that. If we can get a 2 point anything, a 2.9 print, the market would probably go nuts. Because the market will look at it as if though the Fed, who everybody said was an idiot, didn't know what they were doing, didn't know what they were talking about, blah, 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 will have to back up and retrace those statements. Because the Fed will look like they knew exactly what they were doing, and they did indeed fix the problem. Stability, price stability, and a good labor market. That's the Fed's mandate. That's what they're supposed to do. Our labor market's fine. Inflation is not good. So there is a 10-point drop almost on the S&P 500. Well, a 5-point drop. So let's see if we can't scalp around here. Let's go see what we can do. Doesn't look like much. Oh, I was getting ready to say, what's going on here? I ain't on these spews. Come on, spews. Let's go. What's going on? Don't tell me this thing's frozen again. These prices aren't moving much. They are moving. All right, 47, 45, 17, 25 is the high of day. 45, 17, 25. So let's sell to open 1. And this will be the last time we try to nail the pullback. The dollar is still going down, though. Yeah, I don't know. This thing hasn't pulled back to retest the midpoint of the ESD bands. It's trading so far above the VWAP, like it hasn't pulled back sufficient yet. But it doesn't have to. I mean, green candle, green candle, green candle, green candle. All right, so we'll sell to open 415. 415, 417.50 is the high. So we're risking 2.5 points. Two and a half points is what we're risking. And all we're looking to make is 5. Why didn't you fill me, dude? Thank you. I seen a 415 tick. There was another 415 tick. So what we'd be looking to do would be close it at 45.10 or 45.09, 45.08, somewhere in here. Or if we could get a 10-point move, that's really all you're trying to do when you're scalping the futures market. But some people will look to do it in 2 moves. They'll look to do 5 and then wait for, a pullback into some resistance somewhere and then look to try to scalp out 5 more points and be done on the day. But I've already been stopped out once this morning on this thing. So if I get stopped out again on it, then I'll be done for the day because I'm not going to risk more than 5 points when the ultimate goal is to try to make 10. You see what I'm saying? And that's just the way you gotta leave it. It's just because some days you're gonna do better than 10, but you don't ever want to do worse than 5 ever. Or in this case, 2.25. So we need to put a buy to close stop market at 47.25, 45.17.25. Right there. And then we can try to put in a limit at 45.05. That'd be down here. But this market is just so bullish. The dollar is about to make a fresh daily low. NASDAQ pulled back for 10 minutes, but so did this. It's not really a pullback. I don't consider... Oh, I guess it is a 4-point. That's a 4-point candle right there. 45.15 down to 45.11.50. I mean, it's a 4-point move. But you got a higher close just then. So what people are doing when they're trying to short this, they're hoping the market just dumps. But I don't think you're going to get that. But we can try. We can put a limit take profit at 45.05. Let me put it down there, 45.05, and just leave it because that would be 10 points. right there. So that's as low as I need the market to go to make 10 points. And that would be a done day. And it's so volatile. I'm only doing it with one contract. But it needs to drop soon. It's 11 o'clock. So you've been going up since 9:30. You've been going straight up. There's 9:30. Right here's your opening range. Think about that. This was where the market expected the high to be today. 45, 50, 44, 57. And we're at 45.15. That is massive move. But that's your opening range. So a pullback to that is what longs have been waiting for. But they will also long on these indicators right here. Like this is a 21 exponential, this dotted blue line. This purple dotted line is your VWAP. So since the open, which is here, this is your opening range. You haven't tested either one of those things. And this looks like it's consolidating the gains. You just basically been trading in a range from 45.11 to 45.17. So literally a 6-point range. So probably what one should do is look to get long at 45.11.75. 45.11.75. Because it's consolidating. That's a bull flag. It's an intraday bull flag, but it's consolidating. Right? You haven't seen any really big down moves. And then this is your open of the day. So we should probably close this and then try to do it the other way. Get long 45.11 and target 45.21. That would be 10 points as well. But yeah, this doesn't look good for shorts. It didn't even make a lower low there. There's your low once you got in the range. And you just consolidated the lows. We probably should have bought that and targeted 45.21. That would be a 10-point move also. Because it's definitely consolidating. It's squeezing shorts. Squeezing them out hard too. But yeah, if you want to be a buyer, you could try buying 45.11 exactly. And then your target would be 45.21 exactly. That would be a 10-point scalp. But like I said, it's not really giving anybody an entry because here's the open, unless you're a breakout trader, right? So breakout traders have been paid today. Every time a high was breached, they got paid. Let's see, that high comes in at 4,500 exact, or 4,500 spot 50. So if you'd have bought the breakout here, what's the high on this candle? 45.08. So that's an 8-point move. Wait for this high, take profits, wait for this high to get broken, which was there. What's this high? 45.08. You break it on this candle. This candle's high is 45.15. So you're getting those 5-point ticks or those 5-point moves by buying high breakouts all day so far. So if you'd have just been a breakout trader today, you'd have made more than 10 points on 2 trades. And then again here at 45.11, you'd be targeting 45.21. So far you hit 45.18, spot 75. There's 45.19, 45.19.25. You see what I'm saying? That's how they trade the ES. And they're just jumping on the breakouts. They have not gotten a retest all day of their 21 exponential, and they have not gotten a retest of the VWAP. Both of these areas would be areas that people would be looking to buy. But not me. Because I think if you do, ultimately you're probably going to have a big bar. And it's probably going to blast right through that. My problem is with breakout trading is you generally always sit in pain. You know what I mean? Like from this high here to buy this, you would have bought it there and then it retraced. We don't know how far it retraced. It could have retraced all the way down to here. And if it did that, then you would have got stopped out because that's 45.0850. And the low of this candle is 45.0350. 45.0325. That's a 5-point loss. So that would have got anybody, any professional trader. But I don't know if it made that low first and then went and broke out. If that's the case, then you sat in this much pain here. 45.0625, which isn't bad, right? But then right here, your day was done. You made your 10 points. And then the high on this is what? 45.20. So, like I said, bought here, target hit. Target hit. So breakout traders are making money today. It's getting late in the day now, though. That's what I'm saying. So now what you'll probably experience once this, you might get another pretty decent move up, and then you'll probably see it slowly rotate. Just slowly for the rest of the day. Until the end of the day, and then up it goes again. So far, breakout traders have been getting paid. I wouldn't look for that to continue for the entire day, but I have seen it happen before. I absolutely have seen it happen before. So essentially buy 45.1725, but that stop would be the low of this candle. Or wait for another breakout and buy it. But like I said, it's getting pretty extended. Bearish divergence on the 5 minute for the QQQ and SPY and CPI spike candle. Yeah, but I don't think I would trade a 5 minute bearish divergence. I just don't. Like, I don't trade divergences on the daily. I look at the RSI on the daily just to basically tell me to gauge the strength of the trend and who's in control, right? If we're maintaining higher highs and higher lows above the 50, then the bears or the bulls are in control of the asset and you should look to buy pullbacks. I do not short bearish divergence on a bullish asset ever. Ever. Yes, you have bearish divergence on the 5 minute, but look how many times you've shorted and you've been wrong. You see what I'm saying? Like, the trade has been to be long. I just spent 20 minutes explaining it. Even if you're a breakout trader, that's been the trade all day. Not shorting divergence. Now, eventually, you're going to get a pullback. You just got a 5 minute pullback right there. So 10-minute pullback, and now you're right back up there. The S&P, as we know, just made fresh highs on the day. I'm sure the S&P has also got 5 minute bearish divergence. It does. Lower, lower, lower. Higher, higher, higher. Trading divergences is not good. You need to be with the trend. I tried 2 shorts on it. They were both wrong. Just looking for a pullback is all. Just looking for a pullback to that 21. Wait for that. And get long. The trade today obviously was to buy the low of day wick spike. Right? Wait for the daily low to be taken out. Get long. That was the trade. So 44.12 to 44.09. That's a 4-point move. So you still probably would have been stopped out unless you got lucky and bottom ticked it. Which you could have, because there's where it stopped. You could have had a limit to buy at 44.09. Because they told you that they were expecting it to be good. At least come in line, right? But this one was good, down from 3.7 to 3.3. That's very bullish. And we knew it was bullish. But to then beat expectations, like that is what's made the market so bullish today. Yeah, today the trade is not a short. Even though it's stretched out on the daily, on the weeklies. I mean, you've gotten, look at these weeklies. It's just insane. Boom. Should have been a buyer at 43.45. There just wasn't a level there to buy. I'd have been waiting for that 43.24. If you can trade the CFD, I can't trade the CFD, so I have to trade the actual futures. But I mean, if it does go down, I'd say it'd be a very slow, choppy drift lower. Be careful trading those bearish divergences, pal. What's up, Michael? Monthly bearish div for Nvidia, maybe. We can look for monthly divergence, but once again, I don't trade divergences. I just don't think they work. Simply because when something's bullish, you stay bullish. I don't see it. I mean, if you're talking about this divergence, wait, what are you talking about? Nvidia. I'm on the wrong asset, dude. Hey, dude, I'm on the wrong asset. I mean, longer term, there is for sure. But I mean, you're looking, that's 2 years. November 21 is when you made that peak. This is August 23. Oh, 2 years. Your divergence hasn't worked yet. I mean, it did if you were able to catch, the top of the bull market. But I mean, it pulled back for 2 months, right? And that's your pullback essentially from there to there. Not very big, but that's a lot of money. I mean, that's $100 pullback. You're looking at 502 up there at the highs, down at 396. That's over $100 pullback. So yeah, decent. But I don't think. I mean, like I said, it's just based. It's all based on CPI. You just have to trade the market. You know that CPI came in lower, so now you're going to be looking to buy daily supports. Wait for the market to consolidate these gains, and then look to be a buyer at daily support. You got one there. You got old resistance there. I mean, but I would assume, I don't know where it pulls back to, but when it does, I would steadily focus on those daily closes. And I'd look to be a buyer then. All right. You got daily res setting up there at 45.14. It'll be different on the ES. All right, you're coming into supply, so sell it, right? It's a sell. We're at the Heath level. Let's see if it looks like that on this. I hate charting on this platform. It's so bad. So you haven't hit supply yet. I doubt you're pulling back to there. You could, though. So there's your double bottom move up, break down right through there. Here's your retest. Not quite a retest of it, but you did retest this candle. It's where it found resistance and it rolled over. So maybe it finds resistance at this supply zone and then it bounces back down slowly to here. And then we'll be looking to buy it then. Something like that. That's what I'm looking for. Something like that. Excuse me. Yeah, not bear div yet. Not quite. It looks bullish, you're right. I mean, it's making almost fresh all-time highs, man. I'm looking at AUG 23 and AUG and the one coming in 24. Gotcha. Yeah, I see what you're saying. Looking for future bearish divergence. I just like I mean, I've found most success in trading and trading towards the trend. I hate being a breakout trader. So like that line up there that has not been touched, if that line were to reject price, then I could potentially look to sell it one more time, right? But then that would be the end of it. I mean, because it's bullish. The trade was down here. It was simply buy the low flash at 8:30. As soon as the clock turned to 8:30, you get that push lower, you buy it. I have a whole video on it. You buy it. And that would have been the trade. I just missed it. So now you try to sell it because you were unable to buy it, and since you're up almost 100 points on a day, it doesn't justify longs. The S&P 500 is up. Fair Free Digital coming in with $100 super chat. What? Man, thank you so much. I appreciate that. We have 100 points on the S&P 500 from low to there. That's 100 points for the $100 super chat Michael just dropped. Thank you, my friend. I really appreciate that. Really appreciate that. But yeah, so like that's typically what we do as traders. We miss the trade, then we try to short it. I can't get long when the S&P 500 was expected to move 31 points today and it moved 100. You know what I mean? It's like, I can't buy that. But people are, obviously, because this thing is still cruising. And I really want to give this thing a few days to consolidate these gains, see if these gains do consolidate, right? If they do consolidate, then we look for bullish entries at support. It's not really for me as much as everyone else you help for free. It's my pleasure, man. I really do appreciate it. Though, I mean, the gesture is freaking awesome. I got much love for you. He's Michael over on Twitter if you guys want to give him a follow, and he publishes some pretty cool stuff. Let me get Twitter. I just don't remember what your handle is. It doesn't show me your handle. I'll look you up. There you are. At Fair Free Digital. Right there. At Fair Free Digital. One word. He posts some good stuff. He's got a decent following as well. So give him a follow. I don't want to chase QQQ, but I want to wait for a good entry for a longer term swing trade. What's a good pullback to wait for? How deep? Fib retracement? Well, that's the thing, right? We got to be, the Fed is data dependent right now, month to month. So that's the way we have to be. Because simply, if we get a 3.7 tick up on the CPI next month, then I wouldn't be bullish on the market. I wouldn't be looking to buy the market. But what I would do simply is what I just said. Let's find a time when you're bullish here. So big bullish, you're consolidating gains right here. So you were in a range for a long time. Then you broke out. You came back in the range. Then you broke out again. You consolidated those range gains right here. Now, buying daily support there would not have worked. You would have been stopped out. Buying daily support right there would not have worked either unless you waited for price to trade back through it. Waited for price to trade back through it. So we can go back and look on an hourly chart. So right here is that daily support. And we've consolidated the breakout gains. You wait for price to get back through it. So you'd have just bought it right there. And if you're looking to be a buyer for a long-term hold, then that is not a big stop, right? I mean, you hit 2-to-1 risk to reward within 2 days upon buying that. And that hourly close would have told you you were good. You were good. Because it just blasted through there. And that's what we want to see. And that happened at 4 o'clock p.m. So you'd have been able to buy that then. I'm not sure how you're trading the NASDAQ, where you live. Are you trading the CFD? Are you trading options, stocks? But this happened at the close at 4 o'clock. So yeah, you would have had to buy it on the push up through if you would have been able to. And then you just do that. You just wait for gains to consolidate. So breakout, push up, right? And then what? Consolidation. The gains are consolidating right in here. So these are areas that you look to buy, right? Supports. At a daily level, preferably, if you can get one, but you don't always get one. So we'll go back and see if we got one right through that consolidation. Let's see here. That was probably right through here. I mean, you did ultimately get one right at the 21 exponential. Could have bought that. That would have been, yeah. That would have been an easy one to buy. Daily support, but it was also a late buy. But New York session here, you'd have bought hourly support at the New York session open. It won't let me go back that far right now, but yes, just something like that. You just wait for the gains to consolidate. You're going to have to give it time. It's not going to happen like quick, right? It's not going to be like tomorrow you can buy it. It'll probably take days to consolidate this breakout. But since we've hit the same level, the same price point we were at the last time we were here at 3.2%, I would say it'll probably consolidate, chop around, watch for daily supports. The close of bearish candles is daily support. And then you can watch intraday hourlies to get, tighter to look for bullish entries. And then, of course, I mean, you could potentially wait for the moving average to catch up to price also and be a buyer of the moving average on a daily time frame, 21 or a 50, you can be a buyer of. '21 or the 50 you can buy. So you probably got some time to wait. But I wouldn't expect like fresh yearly highs or nothing like that based on the fact that we're trading right where we were when the CPIs were this low. Right? So this is essentially just priced in right where we were since the last time we had a 3.2 print, which was in July. And then the very next month after that's when we went up from 3.2 to 3.7. And that was directly because of oil. I mean, oil shot to the moon. Now, here's another thing to watch also as far as, getting long the S&P 500 or the NASDAQ is, does oil find resistance? Right? Does oil find resistance? Because if oil continues back up to these prices, that's going to take the headline CPI number back up. Every $10 move in the price of oil per barrel, which is this number right there, that's the number you're paying for oil per barrel, 78 bucks a barrel. Every $10 move jacks inflation up by 0.2%. So if oil, it's trading at 79.03 right now, if it gets up to 90 bucks, that's going to jack inflation up to 3.4%. And then I would expect the markets to probably roll back over, because that would also mean the Fed has not beaten inflation. But it's not just the headline CPI number that we got to watch. There's all kinds of other economic data out there. The PCE, inflation, they look at that. They look at a bunch of other things. We're still doing terrible on manufacturing. Like all the things that the NBER looks at to call a recession, the only thing that's good is GDP and jobs. So jobs and GDP, if they were to break down, if we got 2 quarters of negative GDP with all of the manufacturing and every other number that we got right now, and jobs was to get above 4.5%, the MBER would classify that as a recession. So, but most of the other stuff is still broken, but this was a good print for inflation. At the very least, it says the Fed probably is not going to be hiking this year, December. So we will get one more Fed rate decision, and it will come in December, and they will probably not hike. Like it's a 97% chance they will not hike in December. But the dot plot matrix, the last one we got, see, with this last Fed meeting, we didn't get a dot plot. We didn't get one. We got one the Fed meeting before, and that Fed meeting had a rate hike on the table for this year. But there were only 3 Fed meetings left. So the market was essentially pricing in a potential rate hike based on what they said. So there you go. There's the market pricing in potential rate hikes, further rate hikes. You've seen it on the dollar as well, pricing in further rate hikes. But once the rate hikes paused, look what the dollar did. It paused. Now the dollar is rolling over. Why? Because there's a very high chance, at least for 2023, there will be no more rate hikes. And as long as that's the case, and as long as inflation stays good, continues lower, then you buy daily supports. That's how you invest. You buy pullbacks. You buy bearish candles. Or you buy when price is pushing back up through them. So like on the dollar now, we'll be looking to sell right here. If we get a pullback to this region, we will be looking to sell that. And the same goes for oil. Oil did test a level technically, and that level is right there. You can barely see it. That bearish candle's low. So I would just put this block on it. From there to there. So that's right where it's tested so far. So now what I'll do is I'll wait for this candle to close. Wherever it closes, tomorrow I'll be looking for a retest of this candle's close, wherever it may be, to sell, to be a short. I will buy puts on oil futures. Puts on oil futures. That's the way you can do it. Or if you are allowed to trade the CFD because you live in Europe or something, like Forex, then trade the CFD the same way. I mean, I wish we could trade the CFD. It would be much easier, but at the same time, we can trade futures. And the oil has a micro as well. So if you have a small account, MCL. This is oil futures when it pulls up. This platform has trouble pulling stuff up quickly. I can tell you that right now. It has no trouble executing, getting in and out of positions, but just pulling the data up, it takes a bit. So here's crude oil futures, but this is a micro contract, and we're trading in January. So let's go to the daily. Let's bump this out year to date. And I'll show you what I'm talking about on the futures. Because it has a different price. It's showing 78.82 there. And this is showing 78.80. So it's close. 78.86. It looks similar, don't it? It actually looks better on this chart. There's an it actually tested old support. And that's why it's rolling over. Or that's where it's finding resistance. All right? Set in a low, go up, and then break down. Retest that low. If this acts as resistance, wherever this candle closes today, tomorrow I will be looking for a retest of that close or a retest of 78, whatever this line is, 78 or 79.42, and I'll look to buy a put option or just short this. And you can do that just by hitting sell to open. It costs $930 to short one contract of the oil futures. But this thing moves also. each cent is a tick, and I can't remember how much. Let's look it up. Let's look it up so I know for sure. I can tell you the accurate number. How much is one tick on the micro oil futures contract? $12.50 per contract per tick. That's for the regular. That's not. Here's the micro. So it's $12 per tick. So each cent, I guess, would be $12.50. So it moves fast. It moves very fast. You can get hurt quick on oil. But I can't short it today. I gotta wait to see if that resistance actually holds up there, and where does it close out today. Then tomorrow we'll be looking for shorts. If we push back up maybe there to 79.40, then maybe I'd take a short position on it or buy a put. The puts are cheaper. You don't lose as much. Actually, I don't know what a standard contract is, so let's go look. Let's just buy one or sell one and see what it costs. Because it'll show me in the positions. This thing keeps going out. Let's go. Come on. Let's go. All right, so not a lot of liquidity today. And January contracts, we sell to open. Should we sell one or buy one? Yeah, each tick is a cent. 1 penny move is a tick. So we'll buy it because it just made a fresh 1 minute high. All right, so we'll buy it. Now let's go over here and see, because this is what it is right here. This will show you how much each move costs. Or it looks like a buck. So each tick is a $1 move. Right? Each penny is $1. That's not bad. It moved 4 cents. You're down $4. 6 cents. Now you're down $6. You see? So that's very manageable. Very much manageable. I wanted to close ARC, didn't I? Let's get that gone. All right, go back to the grid. So yeah, we can trade it like this, or we can trade the options. And I'll show you that it has options. Just forward MCL /MCL micro crude futures. Pull up the trade tab and table. And here's all your expirations. Let's just pull up a 30-day contract. You can see right here a $79 put is trading for, $322. You could get filled on the midpoint easily. These things have little volume in them right now, but they are getting more and more as the CME is trying to bring market makers into the micros for smaller account people. These are new. The micro contracts are new. We should probably close that oil trade out. Boom. See, you get good fills and stuff, but back over here, you can see, yeah, the contracts on the options, or the options contracts on futures contracts is, it moves a little slower. You can see it just moved 1 penny there. But that would mean you would own 100 shares of it. Or not 100 contracts. I can't remember. It's like 100 shares. So you would own 100 of these. So you can do the math on the moves, but they don't move very, very fast. But they can, if you catch, a nice 2 or 3 day move, you'll be up over $100, $200 on it. But the whole point is to find it, right? That move. And we will find it. We will find it. And we will take that trade. But yeah, just wait for pullbacks to support. Mostly NOSTR now. What's that? I don't know what that is. Oh, you don't post much anymore? Gotcha. I wrote the bearish divergence comment about 20 minutes before you went through a 20-minute spiel on it. Yeah, that's typically how I do it. Can I check out the US 30 to Dow Jones? Yes, I can. It's up today. And it's been going up with risk. So that was a little bit more of a decent pullback after breaking the highs. See how it took 4 days. On the 5th day, you finally broke back out. And then boom, boom. So that's a consolidation. You would look for something like that. Well, that's not quite big enough. Like this right in here, because it couldn't break above that. So this would have been a consolidation area that you would have been looking for support check. Intraday support check. And get long, baby. Get long. It's doing okay now. It's up on the year, finally. There's your yearly highs. So you're not far from making fresh yearly highs on the Dow. Another 2% move to the upside and you will make fresh yearly highs. Now, obviously, the Dow Jones is different than the S&P 500 as the way it's weighted. The yearly highs are only 7% on the year. So it never really got going. This is another reason why people are bearish. You would typically want to see this thing rallying along with the Russell rallying. But the Russell hasn't rallied in a long time. So since the bear market of 2022, this thing actually started way before everything else. This thing rolled over at the beginning of the year, 2022. So there would have been another time that you could have just simply sold on the yearly opening if you were bearish. Sold resistance the next day. you would have been in the trend, which wasn't a huge trend, but it did ultimately result down to 28.5. But I mean, it's doing decent now. So if we get the Dow Jones rallying and we get the Russell rallying, that's going to help the broader S&P 500. And as I showed you earlier, every single sector in the SPOOs is bullish. Every one. Now this is an iShares. This is a Van Eck. This is a spider. So this needs to move up to there. Van Eck, iShares, Taiwan Semiconductor, iShares, Vanguard. But all of these are all S&P 500 or the spiders. And they're all bullish. This is the bank stock or the bank ETF. XLF is financials. This is actually a bank ETF. But I mean, the financials follow the freaking banks too. So literally either one you want to trade is, I mean, they're even closely resembled in price. The XLF is 34.57 right now, 39 here. So, but yeah, banks are attractive because they're down on the year. Anything that's down on the year should be attractive for investors if they think a soft landing is imminent. All right. Are gaps worth considering on the QQQ or SPY? Not really. I mean, they're there, but I mean, they don't have to fill. You can go back in time and see where gaps did not fill on the SPY, right? I've done this many, many times just to prove a point. And some of these gaps are never going to fill on the SPY, right? Let me find one under there. There's one that did not fill. See? Gap never filled. And the SPY is trading at what? $400 right now? 44.84. I don't see it getting back down to 153. So that gap will probably never fill. This gap right here, from here to here, 142.58 or 144.71. Everybody that got bearish here for this gap fill, they got smoked. So gaps do not have to fill. And I can do this on every single stock. Here's another gap that did not fill. That gap was close, but this gap closed here, gapped up to there. That's a big gap. It didn't fill. And you can do that all the way down. So I only pay attention to them like if they're close by. I wouldn't be like trying to get short right now to fill this gap, and this gap. Like these gaps might not fill, right? Unless something bad happens and the market goes back into bearish sentiment, these gaps will probably remain unfilled. So I wouldn't be trading for these gap fills. But the way that I got long on Tesla after it filled this gap here, right? When we filled it there, that's when I got long. and basically said that I can see this gap filling. So that gives me a what, $205 entry for a 242 target. That's a $40 move, but I didn't just buy one option. I bought a spread to slow the movement of price down, because options on Tesla move very, very fast. For instance, if you would have bought a put here, you would have woke up down $1,000 today on one contract. That would have not have been fun. This is a $5,000 account, so I can't afford to take those type of risks. So, yeah, they don't have to fill, but when I did initially take this trade, it was basically I'm just using gap fill for target back to the upside, because I do believe it's going to rally even farther. I mean, there's a gap up here that's unfilled, but it doesn't mean it has to fill. I don't chase gaps far away, but I will look at them if they're really close, right? As long as it's within the trend. The trend on Tesla is down, but Tesla is generally traded as a tech stock. It's generally traded as a tech stock. So my thinking was it's lagging tech. Why? And that was the first thing. Second thing is I'm going to go ahead and take entry here, assuming that it's going to fill the gap and this daily support will hold. And it did hold. It held. I watched as it traded lower and then right back up through it intraday. And then the next day it was up. And then today we're up. We're up 4.75% on the day, which is probably leading the S&P 500. Well, it'll probably be leading the S&P 100. I don't want to go through all 500, but it's not up big, the biggest, but we'll switch this back to the S&P 100 so we can just see right here. Where is Tesla? It's leading tech to the upside. This is Tesla's candle. But we could just simply go back to TradingView, look at the Magnificent Seven, and then look. It's leading tech today, which is what I wanted to happen. I wanted Tesla to play catch up, if you will, and get up into the 280s, maybe even. And I told you this like earlier when the stream started, if you wanted to be a buyer of Tesla today, I wouldn't wait for a gap fill to be a buyer. Since everything's so bullish today, I'd probably just take a long there. And so far that's held. That would have been where you would have got long or bought your call or whatever. But yeah, the gaps don't really matter too much if they're far, far away. If they're close, I put a little bit more weight on them, but generally it's towards the trend. I'm trading TQQQ. Okay. That's one way to do it for sure. Is that a leveraged product? Because these things get rebalanced on the daily. I don't know if this is or not. TQQ. I don't know. It just says Ultra Pro. It doesn't say if it's levered or not. But be careful getting long the triple X leveraged ETFs because they resettle every day. So like if you look at them in a long time, you think they moved up 500%. They didn't, right? They didn't. It's hard for people to wrap that around their heads, but they get resettled each and every day. You could be up today, price could gap up, and you could be down tomorrow, the way they settle those things. But yeah, Michael and Michelle in comments throwback to the CTM days, right? Because we left a lot of them down below. Yeah. Yeah, no, I am bullish on Tesla for now. I mean, I technically shouldn't be because it's under the 21, it's under the 50. We're above the 50 now thanks to today's move up, but yesterday we closed right at it. Typically, I don't start to get bullish on an asset till it breaches the 50 on the RSI or the daily 21 exponential. So technically, I shouldn't have got long until today, but I did. I got long expecting for this to stop right here, and then turn around and head back to fill this wide gap up there, and to turn around and be bullish, just because tech is right. But yeah, what a clown that guy was. All right. You guys have a fantastic rest of your day. We've been live for 2 hours and 45 minutes. It's a little long. But thank you so much, Michael, once again for that amazing super chat. I really appreciate you. We will be live again on Thursday. So we'll try to find a trade on Thursday. We're not able to find one today. So maybe we'll get lucky and find a good trade on Thursday. You guys have a fantastic rest of your day. As always, make sure you trade safe, trade smart, and happy trading, everybody.